Mic check and screen share check, please. Okay. Welcome aboard Nightly Strategy Podcast for Tortoise Capital for July 18th, 2022. Here's one from Ed Jackson. He learned about just riding the train today. He got the PSAR flip in Twitter on a 10-minute chart with an entry at 37.70 with a standard risk of 20 cents. Set it and forget it. Took his exit here after the RL10 crossed the baby dragon for 4.25 R in a couple hours. The least hurried trade of the day. So good job, Ed. We'll start with the market health check. Stand by. Make sure the sound's any good. Okay, so today we started off on a positive note with a gap up. So you will recall from last week we had that we were suffering through the give back after this move up to the Bollinger Band mean. It pulled all the way back, and then finally on Friday it gave us the gap up, and then a strong finish back to the Bollinger Band mean. So we were hopeful for this kind of move. It started off well with a gap up, but then immediately just decayed the rest of the day, back down to the bottom of the dragon, a disappointment, and left us with another just a big question mark about where to, market. You going to do this for us, or are you going to break down? Tomorrow will be the determinant. You got a river that is sloping down. It's going to meet the PSAR up in here somewhere for something decisive. The RL10 has rolled over twice. You know, we're still in the spring, so that's hopeful. But today we'd have liked to have seen this open here and close there, which would have given this kind of upward tilt to the RL10, but it opened here and closed there. And so that causes the RL10 to roll over into a little state of depression here. So it's right at the bottom of the dragon. And that's going to be an important price level around 381. If that breaks, it's a quick shot down to the PSAR and Z1 and the 5 and 10 day low. And if that breaks, you know, that's a $10 move, which is about 3%. If that breaks, that will be truly decisive on the way down to a 30-day low, which would come back and test this, and a 150-day low. And if that breaks, look out below. So we're not far from a return to hysteria. Even at the same time, we're wanting to see like a double bottom and a resumption to the upside. So we're in a perfect critical state, a compounded critical state, where the market is equally likely to make large or small, large moves in either direction in short periods of time. This one today rejected that support level and sold off. So disappointment all around. But this is perfect trading weather for short-term traders that can handle the chaos and don't bring too many assumptions and beliefs and forecasts and predictions into the trade. We essentially leave all that at the door. So we as we come ready to trade, before we go through that door into the battle circle, we leave all that stuff here behind and we come into that with no preconceived notions other than knowing that this thing could go here or there as it will. And our job is to not get trapped and to follow price and to be adaptive without belief. So we want to be unplanned, but well prepared. And when I say that, what I really mean is you have a plan for if it goes this way or goes that way, what you're doing and how you're going to follow, as opposed to saying, I really think it's going to go this way because of reasons. We're leaving all that stuff at the door in this kind of market. Unplanned, but well prepared. Adaptive, responsive, nimble. That's what we want to see. All right, here's the sectors today. Okay, so here was the S&P today, off 0.83. Actually, let's go the weaker ones. Treasuries were off the most at minus 1%, down at a key price level of about 115. Diamonds were a little weaker. I should say Qs were weaker at 0.85. Diamonds were a little stronger, only off 0.64. The Russell was off the least in the U.S. markets at 0.28. And then here was the cut line to positive versus negative performance. And then the strongest index by far, emerging markets, up here at 0.7. Still only about a 1.5% difference from the weakest equity index, the Qs, to the strongest equity index, emerging markets, which reverses a trend from last week in which tech was better than emerging markets. So, one day doesn't make a trend, but that was the movement today. All right, let's look at the underperformers. So if we get more weakness tomorrow that builds on today's weakness, these would be the things that we'd expect to fail earliest if that was going to be the case. So the S&P at 0.83, tech and staples off 0.97, ARC Genomics, which was so strong on Friday, off 3 and a 0.16, and S&P Biotech minus 3%. The two bellwethers in tech, that's a disappointment. Microsoft off 1%, Apple off 2%. So that's bad news for tech when those two stable conservative leaders were bad. That's not good. And they brought the Qs and S&P tech down with them. What were the better performers? So I should say when you see the S&P that bad and hardly anything worse below it, that was guys selling the S&P's gains. So if we go back to the health check just for a moment. What happened today was the little buy on dip opportunity that this represented in here, that was enough of a move for them to start selling here. So all the market participants that were tactically buying this support level were willing to get out of that position in this region here. So that's the size of the gain that they're willing to make bank on. So if that's where the market participants, that's like a bird in the hand versus two in the bush. So instead of holding out for 2 scoops to get up to here, they were already selling this just to capture that little piece that little piece of the pie right there, call that 380, 382 to 387, just a simple $5 gain on a $380 symbol, that's about 1.5%. So a gain of that much was enough for them to shift their orientation to become net sellers in the broad index. That tells you how vulnerable this market is and how closely you need to measure your reward and risk and decide how much of a gain is yours to keep. So that should be on your mind in this kind of seasonal market. That's what I want to say about that. Let me know if that's not clear in the chat, or let me know if that was a helpful insight. I mean, it's like when times are really good, guys feel like they could give it a little more room to run, and they're hopeful for much bigger gains, so they might stick around longer. But when things get tight, like when you're trying to scrape meat off the bone to make one more meal, it gets tighter and tighter. That's the kind of market this is. All right, to the upside. Again, here's the S&P at minus 0.8. So we had finance and ARC Genomics, lumber and Australian dollar up to break even. And then where we actually started seeing some money being made, Brazil and the FANGs up 0.12. A cluster of wheat and precious metals, materials, Mexico, and consumer discretionary from 0.2 to 0.3. The other lumber, 0.34. Lithium and marijuana, 0.5. This nice cluster here, VXX, 1.7. That bodes poorly for tomorrow. Clean energy, 1.8. Blended commodities, 1.9. Bitcoin, 2%. Food, 2.14. It closed above 20, which is a significant psychological price in DBA. The return of the inflation trade. Energy sector and Simon Property Group, 2.3 and 2.4. Oil exploration, 2.9. Blockchain and blended large cap crypto, 3 and 3.4. Oil itself, 4%. Global future of finance, 4.7. I cashed a piece of this swing trade. Ethereum up 16%. Most of that was in the gap. And this was a case of if you take a look at ETHE on the 30-minute charts, you're going to see a harsh sell-off, a sideways quiet channel, a breakout from that channel, one day of follow through, and then today's big gap up that closed well. So this was the tell, the breakout from the sideways quiet channel, getting a position, keeping a piece of that, and then enjoying the gain. That's what we would call hybrid trading. And you saw that in Ken Hum's swing trade setup this weekend for all you swing traders that are paying attention. That's how you do it. Symbols that did well, coin. So when you see global future of finance, you're not surprised when you see Coinbase and Robinhood and Squarespace and PayPal all to be on the positive side. The big winner was Coinbase at 9%, Robinhood at 2.5%, Squarespace at 0.44%, PayPal 0.3%. Here's our metals. U.S. Steel, 4 1/3. Cliff, 3.6. Alcoa, 0.84. So once again, that's the sector doing really well. And when the steel or the metals are better than XLB, and it's better than SPY, that's a tell. You can see which way they're leaning, and that's where you want to be for the intraday trade. That's a low risk trade when they're all moving up, and then your job is to find the mover. Tesla 0.2 still closing above 700, so that was generally favorable if muted. It's still kind of muted. That's actually not all that amazing because XL, it's a member of XLY, which is the S&P discretionary, but that was a little better than Tesla. So there was more net buying in discretion than there was in Tesla. So in this case, XLY helped pull Tesla up, is what I'm trying to say in such a clumsy way. So we'll be ready for tomorrow, just more tactical trading with no preconceived notions, but well prepared in both directions. Why is that? I gotta adjust that screen. It's cutting off the headers. Sorry about that. All right, so today's sniper trade of the day is in SPY itself. So here was that nice gap up, which stabilized for a while and then fell out below the rising PSAR. So this is exactly how the PSAR is supposed to work. The PSAR says, look, I respect the fact that you gapped up, but I'm going to give you about that much time to prove that this is just the beginning. And the acceleration factor is what hustles this thing up to here. So you have about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 bars, where if you haven't moved out in 12 bars, I guess that was just a head fake. And this is when it falls through that PSAR. We take the short with a standard risk box, in this case in the S&P, 93 cents. I just round that off to $1 just because. Let me know in the chat box if that's not clear, why the PSAR does what it does. And then the PSAR flip, notice that it picks up the trail at the maximum excursion of the RL10. It treats that one as the indicated price for the reversal. Even though this price never got up to there, there was no price that got up in here. This is like the PSAR and the RL10 gives it credit for saying, look, you had so much acceleration in here that legitimately you would need to see a price above this level to show a continuation of the upside move. But you didn't. It didn't do that. It started to fail. So the PSAR gives you this nice bracket. That's your bracket of uncertainty right there between the rising PSAR here, and then it got violated by the RL10, and then the PSAR reverses up here to the peak of the RL10. So when your PSAR is tuned using the price value of the RL10, you get a very useful adaptation, modification, mutation of the PSAR. Like you don't get the same dynamics in the PSAR if you're using straight price, as opposed to using the value of the RL10 to make those computations. Now, I want you to notice here that the distance to the PSAR was that much, but because of statistics, we know that we can use 93 cents or rounded to $1 as the minimum manageable risk box. And notice that is slightly larger than the top of the dragon. So there's no point in letting this price reverse higher than that, because if it does, it now feels like it's going to be going up. So we expect this thing to fail immediately. It didn't. And so we're giving it this much room to make a decision. And then the PSAR is going to come down and say, look, bud, you had 20 bars and you never gave me the upside move. So I'm getting out of this position for a scratch. And because the PSAR is now flipping, I'm going to say failure to fail is information. And so in fact, the fact that it held this price level without coming back down to the close is information. You say, I wonder why it didn't fail. I don't care. The fact that it didn't fail is enough to suggest that it might go up. So we adopt the alternate position here, and we take because of the rule, take the PSAR flip. There's my manageable risk box, but I'll tell you, I'm just using this line right here as my actual execution. Like if this started to fail, this is where I'm going to get short, because that's where the statistical support level at the bottom of the RL10 was. That's a collapsing dragon right here. I don't have to wait for it to come out of that box. I'll just take the minus 0.3 and get short right there and still expect it to come down to this price level here. So we're trading at a moment of maximum uncertainty. Price did nothing different inside that little space, but this was enough information to say that the short side is no longer favored. It's worth the long side. So it goes up here. I considered getting out here, but I was so close to this price level here. I said, let me give it a little bit more room. And then it failed. So I took this as the collapsing dragon. The commander's override. I was willing to take a 0.3. The fact that it didn't fail sharply still made me want to believe it could go up, and all because of this initial buying surge. Maybe there was going to be some late buying. I don't know, but there wasn't. So this is where I get out, and that's where I reverse, because that's the collapsing dragon. Check or hold. I'm expecting this move down to here. And if it fails through here, I'm going to add a second position. But this was about an orderly payout, and now it starts to reverse up. And I said, you know what? I would like to get paid a little bit. So I'll capture that move. And it didn't break through the PSAR, and it did immediately reverse back down. So this is that little pattern that you hear me talking about all the time, that if this is going to really work, you would expect it to go up here. And then if it doesn't work, then you expect it to roll over. So you get this big sine wave. But if the downside is really strong, then what happens is that this upward move it's so weak that it doesn't even pull the RL10 up. Instead, it just hesitates and then fails again. And that's what you see here. It hesitated and then failed. So that's why this is a really strong signal. If you think of that as leg one, now this is leg two, leg three, we end up seeing 4 legs on this one. I see 1, I plan for 2, I hope for 3, I dream about 4. So that's why this is a good continuation pattern to the downside instantly. Well, Ken, if you were just going to get into that anyway, why did you get out here? Because of the rule. Because it was not failing and it was approaching the PSAR and I wanted to get paid. Yeah, but Ken, 6 minutes later, it just started to fail again. So why did you get out here? Because I can't read the future 6 minutes ahead of time. Gary Pierce asked me, does the lunchtime come into consideration? Not an SPY. That is a continuously traded contract. Those guys that are pushing it around are eating at their desk because they're robots. That thing is on autopilot, and there's no lunchtime in the SPY. Maybe 50 years ago there were when humans were trading this, but these are killer robots that do not feel pain. So that's why this is a really important reentry. Now, if leg one looks like this and leg two looks like that, I love getting paid because that might be the price level that triggered all the buying for the overnight move. I have every reason to believe that it's going to find support where it found support and that we're going to see this move back to here. So I give back a little bit because I'm on the correct side of the declining PSAR. Oh, the RL10 couldn't even get through. And now notice this is where you get a slightly more exaggerated bump and fail. That makes this one a collapsing dragon. Notice on this one, that little bump didn't even bump. It just immediately failed. That's why that's the easier entry. This is also an easy entry. You've had 1 and 2, and now you only got a couple hours into the afternoon. Maybe there's a third leg. It turned out there was. So just get paid and felt like, you know what? Why not? Here's another collapsing dragon and got lucky. So that was just like an accelerating collapse the whole day. And this is in the market itself. And so everything that is strongly correlated to the S&P, which is all of the broad indexes, all of the US large caps that constitute the S&P, they all took on this same form. Big gap up, no follow through, slow and then fast fail into a really poor close. And now tomorrow, it wouldn't surprise me to see a big gap down and then buying pressure and reverse to the upside, or big gap down and continued fail. Those would be the least surprising moves, but the bigger the gap, the better I like it as a trading vehicle for tomorrow. So that was the trade of the day today for the snipers, played in the usual way. And the lessons I want you to see are that PSAR and how that works, and this PSAR reversal, that one, and then the re-entries after the collapsing dragons, the failure to follow through. Never happened, so the downside took over. Those are the lessons to learn for today. Dashboard number 1, bearish normal. Disappointing sell-off on the 2-day. A glimmer of hope still on the 10-day, but fading fast. This little move here, if that might be all there is, and resumption to the downside, that would not be surprising. The winning trades or symbols: Walmart, McDonald's, Diamonds, and Walgreens. Those are the opposite of sexy. That's old reliables right there. Alcoa, Pfizer, Tesla, Microsoft, Biotech, China, Brazil. All the aggressive growth things are all getting smashed. Only a couple of dojis today. Travelers is 4.4 to 1, had a big breakdown on all his time frames, 10-day, 1 month, 3 month, 6 month breakdowns. The metals, we saw that already. Alcoa was strong. Energy was strong. Chevron. Finance was strong. Goldman Sachs. Not much to pick from. It's the index right now that was the big deal. In the ETFs, kind of the same thing. Only a handful of dojis, no other swing trade patterns, lots of market indecision, but gold still bad, oil good, 4.4 to 1. This is a market that is in such a critical state. I mean, it sold off harshly, rebounded, sold, and this is diminishing. That is coming to a point, compound critical state, coiled spring ready to explode. That's what all of the signs are pointing to. Especially now, Biden goes to the Middle East, accomplishes less than nothing, and comes sneaking home in the dark, and nothing good on inflation or any policy. What a disaster. Auto framer, just a handful of symbols that are better than 2 to 1 long term. Treasuries, I think, are poised to be interesting if we get market weakness. Oil, especially. His trip was so full of nothing that the price of oil went up $4 a barrel, even though he went over there to beg for more production. The Saudis blew him off. He's a joke. Chevron, Caterpillar, Brazil, Microsoft, still in a pretty good position there. Only a few daily squeezes. Today's range was actually relatively large, but oil and exploration, energy, Chevron, that's telling you where the potential pop really is in energy tomorrow. And Tesla was actually fairly tight with a 1.5, and it's in the top 20. His range stat is now $48, so it's 4.8 on the R10 intraday on Tesla. It's now less than $5. I'm still going to use $5. In the fractal framework, US Steel still 8 to 1. Chevron, that's a good one, 7 to 1. Liking that. Sniper headquarters for sniper targets, starting to get more snipers and Godzillas here from the S&P 500. Now we've got 4 starting to make the large move on the 5-day. These are the enraged Godzillas. Travelers, CB, RE, CINF. So you can see that their indexes, they're all getting smashed in the lowest percentiles. And now you're seeing large moves in the 5-day and really large moves on these two, CB and CINF. The 1-day move is really, really large. These are all stealthy Godzillas ready to break out. I'm drawn immediately to Caterpillar in United Artists. Brazil, in the tactical symbol set, a quiet Godzilla just ready to go. We're going to see a nice trade intraday on that one. So Godzilla coming back into play. Whoops. Only one fireworks left in Humana. Very, very quiet. So it's the top of its move and a very quiet 5-day and 1-day, almost like a compound doji. Is it going to pop up or fall back to earth? That's really where the smart money is. A lot more fence sitters on failure to follow through. Conagra had a strong 5-day move, and that's in the food sector, and DBA has had an upward move. I would say Conagra to the upside is an interesting idea. I'll let you scan for the most quiets and among the most volatiles, looking for things of interest. There's Citigroup. I should have gotten more out of that one today than I did. And I meant to, I just failed to follow through. Goldman. Finance had a pretty strong day today. There's your sniper plays, your sniper stats for our tactical set. We've already seen that. Mostly spring happening right now. So these are vulnerable to weakness, but are springboards for upside moves too. So you got to play it this way. The clear winners right now, tech and staple, or tech and discretionary. Here's your tactical symbol set sorted by descending 5-day volatility. That's why I'm interested in food and energy and Microsoft. And I got to get more on Ethereum right now. But I like finance and energy as well. Those are in pretty good shape, being among the most volatile. Some anomalies in here on the 2-day strength. Devon, PayPal, Energy, US Steel, Ethereum, and Goldman. Nice. Oil exploration, metals and mining is where the persistent strength is right now. I would also highlight energy. And that was the strong move in emerging markets. It still looks like a 1-day anomaly based on that weakness, but who knows? That could be a shift away from the US, the weakening tiger, and into emerging markets as safety. All right, let's look at some sniper trades of the day. And you already saw SPY. That was the, yeah, we learned that lesson. Here's Mexico, a frog champion, trades like a champ. There's the gap up and the rollover and sell-off happening through the PSAR. So there's your strong gap up. Couldn't hold. Fell down through the dragon, hit the PSAR. Standard risk is right there. Thinking it can come down to here. Quick scratch. Failure to fail further. It's supposed to do that. It didn't do that. It held support. So get paid a little bit. Not much, but would you rather lose? Not me. And then you get the PSAR flip, which reinforces the strength of the up move, and this could be a resumption. Now, it's got to get above this to be very interesting. Aha. So this is the tactical trading space. It has to get through that. And here is the standard risk. The same as this one. Standard risk means standard. Fractional win. Could not get through that peak. Could not get through there. So I take this violation and just say, let's try this one. Maybe I can get to there on a small risk. Like if it gets above here, I'm ready to go long. If it breaks out above this, so I'm really only risking this little chunk right here. Check or hold. And if that's 1 unit of risk, 1, 2, 3. And then if it fails below here, I'll add a second position because now it's in free fall. And now I'll have a big position for 1, 2, 3, 4. So this is using that as a checkpoint. Tactical trade, second leg, small risk, a place where I'm going to reverse and go to the upside. That's waiting for price to just make the decision. You've seen me trade this 1,000 times this year. Stop and reverse. So much for that downside trade. Okay. It didn't fail. It was supposed to fail right away. You're supposed to fail right away, right here, dude. You are supposed to fail. It did not. And now it broke above the dragon. And now it feels like this. Okay. So take that little micro loss, stop and reverse, standard risk. I don't care. Micro gain. Okay. I just get out where I'm supposed to. It doesn't mean I'm a good person or a bad person. It just means I'm trading. That's all. So you capture this. That's good. You lost that. That's also good. That's like a 3-to-1 payoff ratio just on that little tactical piece. And we made a sliver right here. And we made a half of a sliver right there. I'm okay with that. I'll eat scraps. Not proud. Now it fails. There's the PSAR flip. I couldn't believe it right away. So I let it get that far and I said, all right, that's enough. Because it felt like it was testing this price level. That was enough. There's a standard risk. Standard risk is here, but I'm going to execute on that PSAR flip, right? So I'm really only risking that box, right? Even though the standard risk box is up here, this would be if it got that far and I exited here, that would be -1R. But there's no reason for me to stay longer than this red line. So I'm really only risking that much, like about a 0.8. So that's risk management. And now I wouldn't be surprised to see it get to here or to here. If it violates below here, I have to have 2 positions on not later than that. Check or hold. And that's about 1, 2, 3. So this is the tactical trading range where it's still monkeying around. It's got to prove. If it gets down in here, it's clear this thing is moving. I didn't get the second position on, but I took the exit. A little reversal comes up, hits the PSAR. I'll take that trade all day, give back that little bit. This could have been, in retrospect, that could have been, yeah, that should have been. Missed it. I'm cool. I'm cool with that. I love that PSAR. And this is why we call Mexico a frog champion, because it trades like this all the time with very orderly moves. It just so happened this was in tandem with the US. This was getting late in the day already, and I was already committed to SPY. SPY was failing, so I did not take this reentry, but that's a legit reentry, like right here, because it's still, you still got a half an hour left in the day if you want. But I was on SPY, so I narrowed my focus to just that. So there was a little squeeze left in that one. So EWW Mexico. Oh, we already saw this one. This was SPY. Oh, why did I double count that? I'm sorry. That's Brazil again. Sorry. All right, here's peak. This is that healthcare real estate thing that we've been tracking for about 3 weeks. Waiting to see some violation here. Waiting to see a breakout from there. I could maybe take that or maybe take that. Let it settle down. Breaks down, PSAR flip, short at the red dot. Standard risk is the yellow box. I will execute, off of here. So I'm really only risking that much of the box. This is the minus 1. So that's about minus 0.6. So I really shaved off about 0.4 of my initial risk. So I already feel good on this one. And then I let a winning trade go negative. That's a D exit. Bad monkey. Okay, I forgive myself. So let that one go negative. That's bad. Now I get the PSAR flip. So I'm long. Standard risk box. But I'll execute off of the PSAR reversal. Check or hold. So I got my little sliver back. So I did better on that exit. That's good. PSAR flip. Bad fill. I'm going to execute off of that line, but that's the full 1.0, right? So that's a -1. This is about minus 0.6. So I'm really only risking 0.6 on that box. I'm now watching this line. This is like the confirmation that this thing is really failing. I'd like to see it get down to here. Missed the second position a couple times. This could have been, there's that little pattern again where the RL10 barely even flinches and fails. So I missed my own prime directive. This one also could have been a second because it failed right away. So just one position, orderly exit with the PSAR. Maybe that's all you want. Instead of making your life so complicated with second positions, maybe just trade more symbols in a relaxed way with one position to minimize the hypertension. That's a technique. Keep the chimp calm. So orderly exit, stop and reverse, SSC, standard risk, execute off of that line. So now what I'm doing, look how you can minimize the risk of that SSC. I'm just going to be short here anyway because it's a CD, because I think that's the move. But that was enough to get me interested on a return to glory. 1, 2, 3, 4 of that risk. So why not? I'm just going to get short there anyway. That's about a minus 0.3 because that's a 1. So take the 0.3 loss and trade for that one. And if it fails through there, get really large. Or maybe it works and you get paid, and then it reverses into a COTA 2 to the downside. And just get paid. Miss the SSC. Feels like a sideways quiet channel and not interesting anymore. Remember, this is not a big broad index. This is that healthcare real estate company. And when it makes its morning move and starts monkeying around here, it may be done. Maybe that's all there is. So get the early move and then move on. Different kind of target, different kind of routine behavior. Tesla 3-minute. Nice big gap up. Completely missed this move. Thought it was going to fail. So dumb. Thinking again. God dang it. PSAR rolls, or the RL10 rolls over. Starting to see this. There's my break point for the downside if it's going to fall through this. This is probably my break point to the upside. So that's my yellow zone. I mean, this thing moves $50 a day. What's your hurry? Short, checker hold. Failed to fail further. It had 5 bars to fail. It didn't. So get paid a little sliver. That's okay. Not ashamed. If it falls below this RL10 belly, what do we call this trade? Collapsing dragon. Collapsing dragon number 1. SSC. Takes out the PSAR. Up we go. If it gets above the RL10, that'll be really good. Standard risk. This is where I would reverse for the CD anyway. Ugh. That was a lot of travel distance and suffering for a crap move. A little slow on this exit, but that's the stop and reverse. PSAR flip. There's the standard risk box. Can I get a fail? Not much of one. But a little piece. Made a little bank. Stop and reverse. Why? Because this is a COTA 2. Higher low. Maybe this will go. Remember, it can move $50 off the low of the day. Plus 50. Why 50? What is $50? The range stat. What is the range stat? max reasonable intraday move. How do we calculate that? Average range of the last 30 days plus one standard deviation of that equals the range stat. If we take the range stat and divide it by 10, we have now taken the, we've taken the low of the day and added a range stat to it. Now, if we divide that into 10 equal increments, that's the R10 value, 1/10 of the range stat. Meaning, if you get an SSC and you have an R10, you have a statistical chance that's not zero of getting a 9-to-1 reward to risk. So if you just got 3, wouldn't you be happy with 3? Like a third of a range stat move? Wouldn't you be happy to cash that? Yes, you would. That's why the R10 is so powerful. That's the size of the R10 move. That's 1/10 of a range stat move in Tesla. So there could, if there was a range stat move to the downside, this could be 1, 2, 3, 4, 5, 6, 7, 8, 9. This could get down to here before it's an irrationally large move. So why not? Because it could also go from the low of the day plus 10 boxes to the upside. So we're essentially just in the middle in a little zero state minimum manageable risk box. Are you going to break this way or this way? What are you going to do? Let's go. If it doesn't follow through, you just get out. So this one is a failure to fail further. It didn't. It crossed the PSAR. Standard risk. Up we go. Scratch. Stop and reverse. Oh, now we got to move. So now we got a little piece. One, 2. So that's about a 0. This is a 0. That's a 0.3. So don't even count it. So we're up about 2-ish plus a tip. Missed it. Missed it again. Ah, okay. Do you want to? If you don't want 2R, send it to me. I'll give you my mailing address. Oh, we already saw Mexico. All right, so those were the moves of the day. Let's take a look at the traders. Here's Luke on the 5-minute Aussie. Z3 pinch. Plays the breakout, standard risk. Gets paid. A little slow on the short, but that's not bad. We should at least scratch that instead of taking a fractional loss. And then that should be our long, in which case this would be a scratch instead of a loss. So that little bit of imprecision is equal to -1 on 2 imprecisions. So if we were long, and if we got short in here, we should get long here. He waits for the, I don't mind this one. I think this is okay. That's that waiting for a breakout above the high of the day. that you're entitled to do that. That's a good exit. That's where we should be short. And then we might have saved that little piece again. Our long should be here instead of here. And that makes this a scratch. So that's almost 2R in some imprecisions, but we now got kind of aligned. That's pretty good. This is better. This is a little slow, but we didn't lose. And he just keeps firing. Okay. That pays for a lot of errors. So come out of that with 3. That's pretty good. So got the move and got the moves that actually follow through. So we can live with a little bit of sloppy in here. Would rather be better, but I'll settle for good. That's hard art. That's hard trading right in there. And to be able to come out of there still a +3 for today, that's very good. Thick skin. Those are just mosquito bites. Woj with the, is this the 3-minute? Yeah, this is the 3-minute Aussie. He started trading here. Get up 30 minutes earlier. Leg 1 is the same size as leg 2. He also got chopped around, but notice his precision was a little better in here. So that's the, instead of taking 0.4s, he's taking scratches. That's the difference between about 1.5, and that's the difference between a fractional day and a scratch day. That's a good one. I want you to notice again, leg 1 is the size of leg 2. Leg 1 is the size of leg 2 is the size of leg 3. We could have been better here and getting this. And then we could have exited here. So we might have gotten that piece. That's pretty good right there. So that's a good day. Wasn't much wiggle room in there. So if you can come out of a choppy day like that in the positive, that's a good day at work. Woj does nice on Tesla. Stayed out of the chop. Got the breakout above this mess. This is Devon Energy. He got what was available for 0.6. Tesla was just full of chop today. Just wasn't much there. Good professional work today. He was working on expanding his span of control by adding the WTI cash. That affects his results because of span of control. Yeah, and he got murdered in Crocodile River. So good experiment, good idea to keep it separate. Here's Pon. This is a good scratch. This was a worthwhile shot. Good scratch. He was not in the market, but this would be the fake one go-to. I love this reversal entry. Great exit. This was the re-entry. That would be a natural exit. Good try. Got paid. False start. Then this is the re-entry here because it did not fail. It resumed this. So you can get back in here and you get all of that. Re-entry is the key to sanity, but that's pretty good. And he's up 2 for the week on day 1 of the week. So we'll take that. Here he is on the 3-minute DAX. Fake one, go 2. He got what was there, got the reentry. So notice this is like a COTA 2 right here. Nice reentry, got paid. Good reentry, good quick exit. It didn't fail further. Got the breakout, got paid. Good scratch. That was such a grinding market, and still to be able to come out of that with 0.5 is really well done. That's taken what is there. You know, stealing sandwiches from the giant in Jack and the Beanstalk. Okay, we already saw this one. Oh, this is gold. Okay, sorry. This also featured that same kind of grinding, got paid. There was the reentry. This one was almost like, God, I got to get it. It's breaking out. Psych. This is more like how gold trades in those tight bands. Then you see that real narrowing. That makes the breakout good. Got paid, good scratch, good work. Let's see. Tim, he did the weekly owl meditation, even though he was not feeling anxious. Remember the last 3 days last week for him, he crushed it. But he did the owl meditation anyway to start reinforcing that habit. Good times, bad times, we've had our share. You just keep following the process and keep clearing and tightening up. And the shot group, that's a good entry, standard risk, got paid, great reentry, good short, 1.5 R. That's how you do it. Well done. And as he felt it losing momentum, you get this feature, this little 3-bar, this 3 legs. Leg 1 was big, leg 2 was smaller, leg 3 was smaller still. That feels almost like one leg of diminishing power on the next higher time frame. So if you don't get, that's why you got to get that first move out, because quite often that's the move. And then this is just diminishing returns as there's no additional follow through. Like all the guys that bought here are no longer buying here. In fact, they're starting to trim. So it just starts to slow down. So he sticks around less and less, and was even willing to go short in here when the PSAR flips. That's perfect. Perfectly done. All right, that's everything we got for today. We'll get this published and posted. We had a great session in the creativity workshop. We remember we're just in phase 1 of 6. The first 4 lessons were done on that one. And that is a course that you can take it self-paced and just dial in and listen to the videos of our discussions. And there's a huge payoff for that in there. There's always some kind of trading tips and techniques and insights invariably, because our work in progress for that creativity all turns out to be trading ideas anyway. So there's always a strong connection between the creativity we are raising and the application to your trading. So there's always time to get on board the wagon train. Like when you're heading from Kansas City to San Francisco, there's a lot of little checkpoints along the way where you can join the caravan and get the benefit of the wisdom we've been developing from the earliest stages of that course. Don't think like you got to wait for that whole course to start again 5 months from now before you get on that. I will tell you, and the guys that are in that will tell you, it's worth the effort. It is a very nice weekly discipline, and I can't speak highly enough about it, even though I'm in it too. I mean, I'm learning from it too. It's very good discipline for me. Yeah. All right, take good care, and we'll be ready for them tomorrow.